34%, 2x leverage, 48 hours. Here's how I did it. This is Hyperliquid, a previous altcoin gem. This one and Uranus gave us some good price action to trade off over the last couple of weeks. So let's get into it. So let's just first put the replay back to around where the chart was originally posted on the 23rd of October. So Hyperliquid was in a downtrend, quite a steep downtrend actually, from all the way back in September. And then we started to base out with this double bottom whilst also being in a descending channel of sorts. Now this double bottom was lovely because it's formed of the bottom low and then the higher low, which is essentially where the trend is starting to move from a downtrend to an uptrend. So we got the first indication, a higher low, that the buyers were starting to take back control. Then we got a breakout of this descending channel, which also happened to coincide with a move above the neckline of this double bottom. Now the neckline, you could argue, is here or here. So we had a bullish breakout of not just this pattern, but also a confirmation of the reversal pattern, the double bottom, which brings buyers into the market. And confluence is always something you want to be paying attention to. A single breakout is great, but you really want to have bullish signals stacked to ensure you have probabilities in your favor. So the price action came up. We posted this setup suggesting that once we have a break of the channel and the 200 MA, or actually we don't have that on this chart. This is the 200 MA, and I believe this is the off the 1 hour time frame. So this is actually the 1 hour 200 MA. So the premise was we enter on the break of this channel, but not just the channel, a break of the 200 MA, and a break of horizontal resistance, which also forms the neckline of this double bottom. And then based on that, based off this double bottom, based off this higher low, and that triple breakout, that triple confluence breakout, then we have something to trade. And of course, those three things are what we need to see in order to have probabilities in our favor. So we posted this setup at around Thursday, the 23rd of October. And essentially, the idea was we buy the retest of the neckline of this pattern. Now, obviously, buyers could be looking for another entry down here. You'll see here, a pullback entry is now preferred because I felt the market, when I was looking to enter this, Bitcoin seemed to be a little bit hesitant, a bit 50-50 about which direction it was going to go. So I originally was suggesting that you could enter a small amount of your position here, and then if we do get a deeper retrace, to retest the flip side of this channel, this diagonal trend line. Also, because there's a bit of ambiguity about the neckline of the double bottom, there's also another level here around 38.21, which has nice confluence with the 200 MA, the hourly 200 MA. So there's a couple of potential entrances. So the idea was, if you are bullish on hype, you could scale in, have maybe 10-20% of your intended position here, or maybe 30%, and then if it does retrace with Bitcoin, then you've got a second entrance here, and the idea would be that you scoop it up like that. So let's have a look at what Bitcoin was doing at that time. So it was October, what was the date? Sorry. Right, yeah, so here we go. This is Thursday, 23rd of October, around here, and Bitcoin was having a battle for this, essentially the 1 day 200 MA, and there was a lot of whipsaw action going on. So it was a little bit of uncertainty about exactly what Bitcoin was going to do. So I decided that I am going to enter hype. I do like the setup. It's really good. I love confluence trades like this.
Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.
So I look to enter about 30% of my intended position here. Right, at this level at around 39.16. I added my entry. You can see this orange line represents my entry. It's always very important on charts to make it very clear where you're entering, very clear where you're exiting, so there's no ambiguity. A lot of my students, which I talk to, I ask them, so, okay, where did you get into this trade? Where did you get out? And they actually don't know, and they have to double check, and that's not the ideal situation. So just having a very clear, definable lines on your chart like this, in addition to, of course, your long or short trade tool, can be very helpful. So I added on the exchange. It was MEXE I traded. It's going to be a 2x leverage trade, which means if the price action goes up 10%, I get 20% as an example. Then if the price action descends lower to maybe retest the flip side of this horizontal line, which is very probable, right, then I'll come in again with another 30% of my intended position and scoop it up like that. That was the idea. Now, what actually happened was I didn't get my lower entrance. We essentially had a move up from here, despite a little bit of wrangling. We actually didn't get that deeper retrace. So let's have a look at what happened. So I've entered my position. Here we go. There's a bit of wrangling with the price action, a little bit of a dip, and then away we go. And I essentially look at the price action, assess Bitcoin when it arrives at this point, and I decide to take profits. Now, you might be thinking, well, it went higher, why don't you take them here? Well, the reality is that this was part of my plan. This is most likely the place where sellers start to take control. Now, I recognize that there is a bit of ambiguity in these ranges, so it's not a clear, definable trade. But because there's so much ambiguity with Bitcoin, I'm not hanging around for that extra 5 or so percent. I'm not hanging around for that. I got in, I got out, that's it. And then essentially, Hype then just hung around here for a little bit, had a little bit of a battle, and then eventually started to sell off. And now at the moment, it's essentially returned to almost where we took off from, which is around this area, looking for potentially another retest. So I got out here. I could have got a few extra percent for sure, but I don't care about that. I do not. The money is made in the middle. I wanted to get in, get out. I didn't want to be in a trade for multiple days. I just wanted to benefit from this move, and that's it. You're not going to catch the top. You're not necessarily going to catch the bottom. So there's my entrance here at around 39.16. Here's my exit at around 46. And that resulted in about a 34% trade because it was off 2x leverage. And so, yeah, you go 17% spot. And then that was it. In and out, really straightforward, right? Really great trade. Could have cranked up the leverage a little bit, but I wasn't particularly happy with my liquidation point was. I think my liquidation point for this trade was around 19. I think it was down here. If my liquidation point is too high up, like here, then that's too much of a risk. I just don't want to play that game. So how much leverage you use should not be determined by the profit you want to get, but essentially, can you manage this amount of leverage with the current price action, i.e. is the liquidation point going to be quite easily hit or reached if there is a crash of some kind? 2x was all I was prepared to stomach following the crash a week or so before, being very cautious, and that's the way you need to be. Protecting my capital is number one, profit potential is number two. It could have been an amazing trade with 5x or 10x leverage, but it was just too much risk for me. And again, my plan was to actually scoop up another position down here. It wasn't my entire position, which I actually traded off, but that's fine. Profit is profit. A win is a win, right? And again, if the price action had descended a bit lower because Bitcoin potentially lost its battle on that time frame, on that day, which we were looking at. But again, I only entered with a small fraction of my intended position because I was waiting for a lower entry. I didn't get that, which is no problem. It was still a really profitable trade. It's still a great trade, but that's it. I had a clear, definable plan to trade off these stacked bullish signals, and then I executed it, being mindful of the fact that we could have a deeper retrace, and that was also part of my plan. With a clearly defined liquidation point well out the way of the current price action all the way down here, with a stop loss, which admittedly was a little bit lower than I usually like. Usually I aim for a risk-reward ratio of about 3, but because I was implementing a scaling in strategy, that was compensating for the fact that my risk-reward wasn't as high as I usually like it to be, with my stop loss actually back in this pattern, essentially at the point where the trade would invalidate. So really successful trade with Hype, entered on the back of solid TA with a clear definable plan, not messing around trying to eke out the highest possible profit potential, the highest take profit price points. I had a clear plan, I stuck to it, got in, got out, and there's my trade. And that's how you need to do it. We're not just trading off the double bottom, we're not just trading off the breakout of this pattern, we're not just trading off the breakout of the 200 MA or confirmation of a support resistance flip of this level. We are trading off all of it, all of those things. And if we did not have all of those potential bullish confluences, then I probably wouldn't have taken this trade. And this is how you determine which trade to take. You may have traded Solana all the time and you like it, but ultimately there is better, more probable setups to trade off. It was a toss-up between Hype and Uranus. Hype I chose, and Hype just seemed to fit better with my trading style and the sort of approach which I like, and all the different options it was presenting for me for bullish continuation. Now there may be another opportunity here for Hype, but again, this move has been done, and I would now be looking to move on to another setup. But that was Hype, a really successful low leverage trade. Hope you found that helpful, and it gave you a few insights into the sort of thing you need to be looking at to improve your success rate and ensure you have all the probabilities in your favor. A good chart, good TA, and stacked bullish signals with a tremendous amount of confluence, whilst also being very mindful of what Bitcoin was doing and the risk that poses, and then adjusting your approach, i.e. I adjusted to scale in because of the uncertainty with Bitcoin to ensure, of course, you have a successful and profitable trade. But for more trade breakdowns like this, please consider subscribing. Hit that like button, of course, and let us know in the comments what altcoin trades you've nailed recently. We also have a private group you can join that posts plays like this throughout the week, and also make sure to check out our weekly altcoin gems series released each Thursday, focusing on the top setups to watch each and every week. But that's it for now. Catch you in the next one.